What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your stock market technical analysis update. Before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we'll look at the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. All right, so today's price action on the SPY ETF had us going up 0.89%, and we did have a nice gap up to start the morning, and that gap remained open as it did not close throughout the trading day. So we will go ahead and document that gap right here on our chart, and as we know, gaps typically get filled on ETFs like SPY, so that will be a great level to keep an eye on, and that brings us right down to that $343 range. Now you can see here we have new Fibonacci levels on this chart, and we do think it's time for a pullback, which will be healthy for this bull market, and I would consider it a shakeout. So one thing we like to do at the end of the week is we like to check in on our bear bull survey. And we can see here this survey is for the week ending 10/7, so it is a couple of days old. But we do see more people becoming bullish, which is what we would expect to see when the market is continuing to go higher like this. That is where the bears will eventually become bulls. And that's why we say when there's a lot of bearish sentiment, we usually expect the market to go higher. Retail investors are typically wrong, and their gut feeling is usually incorrect and emotionally attached to something else besides the price action and the technical trends. So we can see here with more people becoming bullish, that does mean we're more than likely ready for a pullback soon. And the smart money would like to see more people become bearish so that they can buy at lower prices. So I wouldn't be surprised to see a market shakeout. So going back to our chart, we do have these levels right here for you to keep an eye on. So the first level to the upside you want to watch on the S&P 500 SPY ETF is about $347. Right around that level, we expect to find resistance. And if we do start to get a 2 to 3 day pullback from that level, we're looking for retracements back to $340 and $336. Now on the way down to those levels, we do have gaps that need to be filled at $343, and we do have prior resistance, which could be newfound support at $342. Don't forget about all of the moving averages. We have the 5 EMA, the 13, the 20, and the 50, and we also have the gap all the way down at $331 and $329. So there is all kinds of support levels, and we'll know which level acts as support because after we get a pullback, we should get a confirmation bounce off of one of these levels. So all of these support levels are fully in play, and there's no way to know exactly how far the smart money wants to bring the market down before it goes higher. So all the way down, the lowest I would expect to see the market go is right around $330. So that's about $1 away from our gap close at $329, and there's no guarantee that this gap has to get closed anytime soon, but it's just something to keep an eye on. If we start breaking down below this gap at $329, the bull case starts to look less likely, and we would probably be in a bearish trend. So I'm not expecting to see that happen because I do think this bullish trend is picking up momentum, and I would expect to see this bullish trend stay intact for a while longer. But as you know on the Stocks channel, we do objective analysis, and we're going to trade with what's in front of us. So right now we do have bullish price action closing well above that 5 EMA yet again, and that bullish trend is starting to pick up momentum, and that 5 EMA is creating nice separation from all of the other moving averages. We can see all of the moving averages are positive sloping, which tells us that this is a medium-term bull market. So remember, we have a short-term bull market, a medium-term bull market, and of course, if we zoom out, you could see that we've been in this long-term bull market. So everything is still very bullish, and if you're paying attention, you don't want to be trying to short this market, and you don't want to be a bear right now. If you're doing quick shorts in and out and you know what you're doing, fine, go for it. But if you're still new to investing and trading, shorting is a loser's game, and it's very difficult to do. Especially when you're in a bullish trend, you want to be more focused on buying off of support levels and not trying to call a top. We never want to try to call a top in a bull market, and we never want to try to call a bottom in a bear market. Trade with the price action and the trends, and we can see the price action and trends are very bullish. So watch this resistance level at 347. I do think 347 should be a strong resistance level because our next level above that would be our resistance trend line at 354, or our next Fibonacci extension level all the way up here at 364. So I don't think it's likely we're going to just go straight up into the 360s in a straight line without any significant pullback. So look for this 347 level to act as resistance, and look for these Fibonacci retracement levels for possible bounces. Just to recap, those levels are 340, 336, 333, and 330. Somebody did ask a question about volume in the comments, so I figured I would address it. Yes, we do see the market going up on lower volume, but that is okay. That's why we say the market takes the stairs up and the elevator down. Think of the market going up on low volume as going up the stairs, and you're just taking one step at a time. It doesn't take a lot of volume to send the market higher, but it does take a lot of volume to send the market lower. There's psychological reasons for that, and usually it takes heavy selling to get people to panic sell at lower and lower prices, and generally that panic is what causes that higher volume on down days. So think of it as the stairs up and the elevator down, and that should help you think of how the volume affects price action. So next up, let's go ahead and take a look at the Nasdaq 100, and we're looking at the QQQ ETF, and we do see the Nasdaq 100 very bullish today, closing well above the 5 EMA, and we still have that short-term and medium-term bull trend. So very similar to the SP 500, it is likely that we're going to see a pullback on the stock market very soon. But right here on the stocks channel, we see that as a buying opportunity. As long as we keep forming higher highs and higher lows on the daily chart, we remain bullish, and the trend in the price action remain bullish. So the number one thing to watch on the Nasdaq 100 is watch this gap fill right around $272. That's also right around the 50 EMA, and that should be a very strong support level. Remember, we're looking for higher highs and higher lows, so we're expecting the market to go up, pull back into a higher low, and then continue higher with another higher high. That will show us that that impulsive move that we had after the correction is setting the direction of the trend. And after a small correction to that impulsive move, we would expect to begin the next wave 3, which would be another very bullish rally. And if you're not accumulating positions, you want to start thinking about buying on these support levels. You don't necessarily want to buy as the market's going higher. It's just a bad habit to learn to buy into strength. That's called FOMOing in. You want to buy into support levels when you see them bounce. So in the Nasdaq 100, you have all of your moving averages, which could potentially be support, but more than likely we're going to hold up above this trend line and this gap right around $272. So keep an eye on those levels on the Nasdaq 100. So remember, as bulls, we want to buy off support levels, and we don't want to chase something that's going higher. If you missed the buying opportunity back in this range when we said we were starting to accumulate, that's okay. There's going to be more opportunities to buy in this market. There's no need to chase it, and there's no reason to FOMO in at the top. Next up, let's take a look at the DOW Jones Industrial, and we're looking at the DIA ETF, and the Dow Jones is looking very bullish, closing well above our resistance line and closing well above all the moving averages. We see that 5 EMA is breaking away from all those other moving averages and basically going up in a straight line with how bullish the Dow Jones is looking right now. So the Dow Jones is very similar to the SP 500, and we want to look for this previous resistance level at $283 to potentially now act as support. Don't forget, we have support possibilities at all of the moving averages, and we do have another support level at the gap down at $273 and $272. But I wouldn't expect to see this bullish trend on the Dow come crashing down, and I would not expect to see us come all the way down to 272 anytime soon. So let's check in on the VIX, which is our fear indicator. And remember, we want to see the VIX go lower while the market's going higher. And we see the VIX going down over -5% today. So it's exactly the trend we want to see, and it's the exact correlation we want to see with fear exiting the market as we continue to grind higher on the stock market. So the VIX is reaching the bottom of the Bollinger Band, so we could see a short-term bounce on the VIX, which would go hand in hand with that short-term pullback. So remember, that pullback in the stock market is more than likely going to be a shakeout, so don't be surprised if it's quick and sudden. It's still completely healthy, and it's still completely a corrective move to the impulsive move to the upside. And the VIX is aligning with our theory because we are seeing fear leave this market as the stock market goes higher. So if fear is leaving, the risk becomes less and less. And as the VIX goes down, the volatility in the market should also start going down. So we're not going to see huge swings in either direction. We're going to get back into that market that grinds 1% or lower each day and just continues to go higher day after day. So remember the analogy. It's like taking the stairs up. We're getting back into that market that's going to be lower with volatility, and it's going to just keep taking one step up at a time very slowly. So look for the VIX to head down lower, and we're looking for the VIX to go below 23.5, and we should see a lot less volatility very soon. So let's check in on the sectors driving this market, and first up is the financial sector. And we did see the financial sector break out of our resistance trend line yesterday, and we did see another close higher today. So the bull trend is gaining momentum, and we're starting to break out to new daily higher highs. So the next daily higher high we want to keep an eye on is way up here at 25.76. And if we can get up there and form a daily higher high, that's going to be great news for the financials for the rest of the year. With the financials going into a bull market, that is also telling us that the S&P 500 can continue to grind higher, because the S&P 500 wasn't going anywhere while the financials were in a bear market. So this is great news for the bulls to see the financials growing with this bullish momentum and starting to head out to higher prices. Next up is the industrial sector, and we see the same thing with the industrials breaking out to a new 52-week high and maintaining that bullish price action and that bullish trend, closing up higher today. We see all the moving averages are looking bullish, and we're now forming daily higher highs on the daily chart. So overall, very bullish for the financials and the industrial sector, and we love to see that because we're very bullish on this market right now. Next up is the healthcare sector, and we see healthcare sector also doing well today, closing up 0.9%. and still having bullish price action and bullish trending going on. So it would be nice to see this 20 simple moving average come back and close above the 50, and then all of the moving averages would be stacked to the bull side, and we would continue to see healthcare continue to grind higher. Next up is the US dollar, and we do see the dollar weakening, which is great news as a stock market bull, because we do know the stock market and the dollar have that inverse correlation. So as the dollar weakens, we expect to see asset prices like stocks go higher, and that tells us that all of the correlations in the stock market right now are favoring the bull case. So all of the sectors and all of the industries are very bullish, and we see the dollar weakening at the same time we see the VIX going lower, which is telling us that fear is leaving this market. So if you're still on the fence about this market and you're still bearish, you need to look at the data and you need to look at the price action and the technicals, because everything is telling us to be bullish on this market right now. If you're a bear, you're completely going against the trend. And if you're going against the trend, you're likely to lose a lot of money. So as the dollar gets weaker, we expect to see gold go higher, and we do see gold having an absolute bullish day today, closing well back above our resistance level, which was our previous support right around $1,900. So it could be time to get bullish on gold yet again. And to confirm this move, we would like to see gold come out here, retest the support level, and bounce one more time, and then we would be a buyer of gold right around the $1,900 level. So remember, while the dollar is weakening, gold is a great hedge to the dollar, and we would expect to see gold go back into a bull market if the dollar is going back into a bear market. So with a bullish move on gold like that today, you could be a buyer. But we like to wait for that confirmation and that test of previous support, and then let's get that bounce and let's get that confirmation that gold's going in that bull market, and we'll ultimately be a buyer of gold very soon. So let's take a quick look at Apple, because it's our market moving stock, and we see Apple going up 1.74% today, maintaining that bullish price action and that bullish trend. So we're still closing above the 5 EMA, and we still have all the moving averages stacked to the bull side, and that 20 simple moving average has flattened out and it's beginning to turn positive. So Apple's looking good, and as a market moving stock, if Apple's looking good, we expect the rest of the stock market to continue to look good as well. So Apple's holding just up above support, and if you are a bull of Apple, you could start accumulating at this level. Next up, let's go ahead and take a look at Tesla, and I did put some Fibonacci levels in here for you guys to look at, and we are still holding up above support levels, and we still do have that bullish trend. So the previous all-time high is the first Fibonacci level we want to take a look at, right around $503, and we are expecting to see Tesla go up and test that level at $500. Now the question is, will the Tesla bulls break the previous all-time high and bring Tesla to new highs? So the next level above 500, if we do break above, is $530. Don't forget, we could come up to the previous all-time high, get rejected, and come back down to our support trend line and bounce and get another test at that level. So right now it's looking good for the Tesla bulls, and it does look like Tesla wants to test that $500 level very soon. Next up is Bitcoin, and remember, Bitcoin did break out of our consolidation wedge to the bull side and did test the breakout as support and got a positive bounce. So our next level on Bitcoin was $11,000, and we're testing that resistance level as we speak. So the question is, can the Bitcoin bulls break through 11,000 and send Bitcoin back up to the $12,000 level to see if the bulls can break out of that level? If we break back above 11,000, expect that level to act as support, and we could get a test of support before testing 12,000. But right now the bulls are fully in control of Bitcoin, and we can see the 5 EMA breaking above all of the moving average, and we're starting to see that bullish trend picking up momentum. So watch for the bulls to drive Bitcoin above 11,000, and it could be off to the races after that. So on the S&P 500, we're very bullish, and all of the trends and price action in all of the sectors in the stock market are very bullish. So the risk is low right now, but as we know, there's always risk in the stock market. So remember to set those stop losses off those support levels And if you're buying on support and you're following the trend and the price action, your risk is much less because you have a trade plan and you know your entry and exits. So don't be scared of this market. Try to block out all of the other noise with stimulus and politics and just focus on the technical price action and the trends, because the trend will always be your friend. And if you're trading with the trend, it's on your side and you're likely to continue to make profits on your trades. So just a reminder, after a run up like this, we could see a very healthy pullback, which would be considered a correction to the impulsive move. And after that pullback, we want to buy off those support levels and ride it for the next wave, which should be another very bullish wave in the stock market. So please remember to help me out by smashing that like button on this video. I really hope these videos are helping you out. And if you have not already, go ahead and subscribe to my channel right now so you can follow along with all of my daily updates. Thanks for watching, everybody. Have a great weekend, and as always, I will see you in the next episode.